Hi everyone, this is a technical analysis on GBPUSD. Let's start with a fundamental overview first. The USD came back with a vengeance last Friday following the strong US NFP report, where the data surprised with a solid job and wage growth. There were also negatives like the uptick in the unemployment rate, but all in all, we can say that it was a good report. The data triggered a hawkish repricing in interest rates expectations, with the market now expecting once again just one cut by the end of the year. It's not a big deal in the big picture, but for now the sentiment is bullish for the greenback and we will likely need a catalyst to change it again. The GBP, on the other hand, has been supported by the risk on sentiment and general US dollar weakness before the NFP report. Today we got another disappointing UK labour market report where we saw the unemployment rate increasing further, job losses and wage growth remaining sticky at elevated levels. The data didn't change much for markets' expectations, as the first cut is still seen in November, with a total of 35 bps of easing expected by the end of the year, compared to 30 bps before the jobs data. The Bank of England is more focused on the inflation data, so that's what will influence the market pricing the most. Nevertheless, if we go back into risk on sentiment, the greenback could start to lose ground against the pound again. Now, the daily chart. We can see that GBPUSD couldn't break above this 128 handle and eventually dropped back into the 127 handle following the US NFP release. We can see that the 127 handle is a strong support, as we can also find the trend line for confluence. This is where we can expect the buyers to step in with a defined risk below the trend line to position for a rally into the 129 handle. The sellers, on the other hand, will want to see the price breaking lower to start looking for new lows with the 126 handle as the first target. On the 4-hour chart, we can see that we have the 50% Fibonacci retracement level around the 126.34 level, which is going to be the first target for the sellers in case the price breaks below this trend line. That's also where we can expect the buyers coming back into the market, buying the dip and positioning for the new highs with a better risk to reward setup. A lot will be decided by the US CPI report tomorrow, where hot data should strengthen the US dollar further, while soft figures should see the greenback getting sold across the board. On the 1-hour chart, we can see that we have a good resistance here at the 127.40 level, where we can find the confluence of the 38.2% Fibonacci retracement level. The sellers land on this zone and position for a continuation of the downtrend, looking for a break below the trend line. The buyers will want to see the price break above this resistance to gain even more conviction and increase the bullish bets into the 129 handle. These red lines define the average daily range for today. This week is a bit empty on the data front, although we will have the biggest market moving events tomorrow when we get the US CPI data and the FOMC rate decision. On Thursday, we have the US PPI and the latest US jobless claims figures. On Friday, we conclude the week with the University of Michigan Consumer Sentiment Survey.